G'day and welcome to this week's video, and welcome to 2020. This is our first video for the year, and I thought what we should do is have a look at what happened last year and what were some of the key themes that I learnt out of last year from an investing point of view. So the first thing we'll consider is what was the market thinking about, and as usual, and thanks to the media again, it's a reoccurring theme. I know that the market they were worried. They were thinking about the negatives and what can go wrong. We had the trade war between, not us, but the US and China. Brexit was not resolved at the stage. We had the flow-on effect from the Banking Royal Commission. The banks, the big four particularly, they're in a world of hurt and still are. They've going back over all their old books from a financial advice point of view. They've tightened up their lending. Banking just got a hell of a lot harder. It's costing a lot more money to do what they do, and they're remediating a lot of clients along the way as well. During 2019, the house prices were down in a lot of the major capital cities. After the election, there was obviously a rebound. APRA came in and loosened off some of the lending regulations, and then we had a hell of a lot of natural disasters, fires and floods. It was a pretty ordinary year from a natural disaster point of view. So a lot of tragic moments for a lot of people out there. So all those negatives very well portrayed out in the media, so everyone knew about what was happening. But what did the market do? Obviously, the market doesn't think about these things. The market is thinking a little bit longer term than that. So the market reacted to the interest rate cut. So the Reserve Bank of Australia, as it has been happening across the world over the last 10-11 years since the global financial crisis, has been lowering interest rates to help kickstart economies, to help make sure that people, projects are built, people are employed, and the circle of money keeps cycling around the economy. So the market reacted to that. So the markets are up significantly. So to the Christmas Eve, to the 24th, for that year, the Aussie market was up a full 30%. So it just doesn't sit in line with what the market was thinking about, what the media was talking about, that all these negatives, and yet the share market was up 30% and the S&P 500 around 25% over the same time frame. So it's a real contradiction. So what can we learn about that is, one, that in the short term, markets are impossible to predict. It doesn't matter where you sit in the food chain in terms of financial markets. No one in the short term has any idea what's going to happen. And while last year was fantastic for investors when they're looking at their reports, the timing's perfect for their half-yearly reports, no market will always ever just go up. There are corrections just around the corner, always. We just don't know when. So generally after such a strong run like this, there is always going to be a pullback of 10, 15, 20% at some stage. Again, like I've said in other videos, that these pullbacks, these volatility times, that the media will pump up to scare investors. That'll be people's opportunity that are sitting on cash. So despite the short-term volatility, businesses are always focusing on their services and products. So it's just inherent in what business owners do, is to keep improving what they do, to bring costs down, to bring revenue and profitability up. And at the end of the day, it's that the bottom line, the profitability, the earnings per share, that is the driver of the value of the business at the end of the day. So their sole goal is to increase revenue and profitability and make their business bigger, and therefore that makes the value of the asset bigger over time. So a fantastic year last year, of no doubt. Over the 2 or 3 times for the 2020, we will see some corrections, we'll see some volatility, but when all this happens, I have no idea, and no one does. But yeah, just be prepared and to take advantage of that. If you don't have spare cash to invest at the time, then doing nothing and sticking with high quality businesses is the thing to do. Thank you for listening. Please keep in mind this is general advice only. If you need personal advice tailored to your personal situation, please seek advice from a suitably qualified financial advisor. Thanks for listening. Thank you for subscribing. Those that have, those that haven't, please do. That would be great. Really appreciate it. And we will catch you next week. Thanks for listening. See you then. Bye.